Introducing the all-new Vault from Nordic Track.
Ready?
It's what's inside that inspires.
Chest up, high knees.
Dave, who is a baby boomer and long-term CRE owner and developer who's trying to retire. He really wanted to say goodbye to the stress and burden of owning an apartment complex so he wouldn't have to spend so much time away from his family and enjoying his hobbies. The thing is, if Dave sells his complex, he'd pay $1.1 million in capital gains tax. And he needs a predictable passive income stream in retirement and doesn't want to just do another 1031 exchange, which puts him in another property. Dave asked his friend John if there's an alternative to 1031 exchange, and if he knew someone he could talk to about calculating the potential tax consequences before he puts his property up for sale. John tells him he has a more attractive solution than selling the property and paying the $1.1 million tax, and that it could save him a lot of money. John tells him he worked with Brett Swarts at Capital Gains Tax Solutions, and that's when he learned a secret all about eliminating the need for a 1031 exchange using a proprietary structure known as a Deferred Sales Trust, or DST. Once he understood the DST, it was now crystal clear to John how to sell his property and make money from the tax he would have paid, because he saw how the Deferred Sales Trust could help him defer the tax, have liquidity, diversification, and a way out of a 1031 exchange. He explained to Dave how this helped him achieve his financial goals and allowed him to never have to face overpaying for a property in a 1031 exchange ever again. John also learned that traditional 1031 exchanges aren't enough anymore to defer tax, reduce risk, and make money in CRE, and that he needed to create an optimal timing wealth plan, which solves capital gains tax from multiple angles instead. John gave Dave contact information for Brett Swarts, the founder of Capital Gains Tax Solutions. As a result, Dave connected with Brett, clarified his optimal timing wealth plan, sold his apartment complex, and the net proceeds were moved into the Deferred Sales Trust. After closing his DST, Dave was not only able to spend more time with his family and enjoying his hobbies, he has also been able to create more wealth by investing passively back into real estate at any time, all tax deferred, because he's no longer trapped by the 1031 restrictive guidelines. After he did that, he started spending more time with his family and enjoying his hobbies. Deferring capital gains tax on the sale of your primary home, business, investment, real estate, or other highly appreciated asset used to be complicated. Not anymore. Schedule a no-cost consultation now to learn why Deferred Sales Trust has been used thousands of times for over 24 years and how you can benefit. Talk to an expert now. Call Brett at Capital Gains Tax Solutions to clarify if the Deferred Sales Trust is right for you at 916-886-2986, or go to www.capitalgainstaxsolutions.com to learn more.
If you're thinking,
All right, everybody, Jake Miller, Brett Swarts here. Welcome to another edition of the Capital Gains Tax Solutions Mastermind, DST, cryptocurrency, real estate, kind of all things cryptocurrency and deferring tax and building wealth. I'm excited to be here. It's a beautiful Friday here in Sacramento, California. Doug Grace, welcome as well. Jake Muller, the smoke is gone. I think it's blown towards you in Utah. So I'm curious, are you getting into that California smoke your way? What's happening over there?
You know, we've had quite a bit of it over this direction. Fortunately, where I'm located on the eastern slope of Utah, it has to pass a couple different mountain ranges. And usually we get this north and south wind that clears it up for us. The last couple of weeks have been, well, this last week has been kind of rough. Today, though, sky is clear. Can't complain.
Beautiful. And the sky is here clear in Sacramento as well. So I'm excited to be here again with everybody. This is, I think, about our 8th or 9th edition of this mastermind, and we're having it every Friday at 10 a.m. Pacific Standard Time if you want to join. And I'm going to lay out kind of the three things that we're going to cover today. And the first one is the vision, and then we're going to cover a deal close story, and then we're going to cover unlocking the cryptocurrency kind of, we call it a Rubik's Cube, getting everything lined up properly for the Deferred Sales Trust. So let's talk about the vision. In fact, today I actually might defer to Jake. I've been doing the vision statement for a while, and I'm curious what Jake has gleaned from that. So Jake, what would you say the vision of this mastermind is?
I would say that it's all about tax advantaged wealth management. If you have crypto, if you have a highly appreciated asset, and the biggest concern on whether you move forward with any type of transaction is, do I or will I, or how much is the tax going to cost? The Deferred Sales Trust is a phenomenal financial tool that can help you overcome that hesitation to pull the trigger and have that transaction, because it allows you to incur that transaction at arm's length to where you do not take contractual receipt, and you're able to move forward with life, not have any of these impediments put in the way because we're afraid of Uncle Sam, and in my case, Aunt Utah, so to speak. Anyway, as far as vision statement, helping people overcome their fear of paying taxes through a proper tool and instrument called the Deferred Sales Trust, so that life can continue forward.
Perfect. And it also added that too. Typically, there's kind of three groups in general, generally speaking: people who like the stock market, kind of traditional securities, stocks, bonds, mutual funds; people who are more into investment, real estate, or entrepreneurial, building businesses, developing properties, owning apartment complexes; and then there's the kind of in the crypto world, those who are maybe not so much on those first two and have made some huge wealth investing into cryptocurrencies. Again, generally speaking, each of those have their different flavors for investments and different thoughts on their level of risk tolerance. However, the biggest challenge is, how do you sell and basically diversify into different asset classes? And that's where we're focusing on crypto for this particular mastermind, because we think it's such a big opportunity for those who have bought low and are selling high to be able to diversify into real estate investments, the stocks, bonds, and mutual funds, and to capture their gains without having to pay the tax, being able to defer the tax. So that's where the DST comes in. So that being said, that is the vision. And we are also helping to demystify this whole thing, right? Because when people hear about new tax deferral strategies, right, they get nervous. They feel like they're doing something wrong or illegal, or am I going to get in trouble because, oh my gosh, they're helping me defer hundreds of thousands to millions of tax. And the answer is no. The IRS is very familiar with tax deferral, with the IRAs, with 401ks, which I'm sure you're familiar with, or 1031 exchanges. So these are all tools that they give us as an opportunity to incentivize certain actions. And these actions are selling and deferring and investing into the economy, so it can actually create more revenue, more tax revenue for them, so everybody wins. All right, so that's the vision statement. I want to welcome Doug Grace. I want to bring him to the conversation. Doug, how you doing, and where are you calling from today?
Thank you. Doing very well. I am also in Sacramento, California, so we happen to enjoy some of the same air. Today it is a pleasant day, and it's a fantastic day to be here. So thank you guys for putting on this show. I'm excited to learn more about these strategies.
Absolutely. And Doug, I just saw you, and so did Jake in Texas, right? So we were all hanging out. We saw Tony Robbins, where in fact Jake is in the next week or two or three going to be joining EXP Commercial, and Doug, you're part of EXP, and so am I. So for any of the real estate professionals out there and or business brokers, M&A advisors, or commercial real estate brokers, that's also a little plug. If you're interested in EXP, come check us out. So let's lead to the second part. So the first part was vision. Second part is now the deal close story of the week. Okay. So this is a kind of a cool one. I'm excited. This particular client, he actually is a professional commercial real estate syndicator out of San Francisco. So when I launched Capital Gains Tax Solutions about 4 years ago, worked with the structure for about 10 years, but really launched and went kind of focused like a laser on providing these services and training people. I spent a lot of time doing a lot of cold calls, right? I wasn't producing as much content in the beginning, and now most of everything is inbound, right, as we create this content. But I was making a lot of cold calls, and so I would look up luxury realtors or really high-end listings in the Bay Area, and that's where I'm originally from. And so this particular person, I found him, and I could tell he's a heavy hitter, and he did real estate, but mostly he's buying and syndicating deals, and so he had some amazing listings. And so I just cold called him and just started to ask him if he knew about this, if he opened to meeting. And he said, yeah, I'll meet with you. So I drove all the way down to San Francisco and we sat down with him and went through this whole process. And like most people, what? I've been in the industry for 20 plus years. He's been, he's done, I don't know, $200 million of transactions. He's very sophisticated, smart. His CPA never heard about it. And he was very, very skeptical. Okay. And so this began the process of slowly educating, slowly showing him that this is real, giving him the proof of the evidence of the deal close stories, calling him every, I'd say every 4 to 6 months, checking in with him. And we almost did a couple deals in between there. And then he decided to do a 1031. And, and finally, fast forward about 3 months ago, he finally calls me and he's like, hey, Brett, I'm ready. I'm like, are you sure? He's like, yeah. And so he's telling me about his deal. Now, his deal wasn't a huge deal in that our DST, we typically like $1 million net proceeds and $1 million gain. But he has multiple assets. And because he has multiple assets, I said, look, let's do the first one. You get a chance to kind of put your toe in the water. And then before you dive in with some of those multi-million-dollar projects that you have. And but his biggest challenge is he had what's called a mortgage over basis issue. Okay. And so for those who are curious about what that is, that basically means if you bought a property, let's say for $100,000, and in this scenario, he was selling a property for about $1 million, but he had a mortgage, and that mortgage was about $550,000. And then his basis, I think, was right around like $350. Okay. So that mortgage over basis was that debt over basis creates a challenge that we have to do what's called a partial Delaware statutory trust, which you're going to say, Brett, what's that? Well, that's also known as a DST. It's not a deferred sales trust. It's just another form of a 1031 exchange. And so step one was to have the funds at the qualified intermediary, which he had, which, by the way, this qualified intermediary had never done a deferred sales trust, by the way. So they were also a challenge to overcome because they were like, what is this? Are we sure it's legal? Do we want to get into something that could put us at jeopardy? And they are out of the Bay Area and they're very sophisticated, smart people. The head of that particular exchange company happened to know the mentor for the tax attorney who created the structure and happened to be the same mentor for him. So that was a really cool connection. We got on the call with the tax attorneys and they start talking and they say, oh my gosh, that person who, by the way, Jake, for Todd, was like, that guy knew I felt like every single IRS code. Like it was crazy how smart this guy was. And so they got to talking and that really helped to kind of ease the tensions of, are they doing something funny here? And so fast forward, we did a partial Delaware to replace his debt over basis. Then the other amount went to the Deferred Sales Trust, okay? And so that's like again, basically a 3-year journey, 3.5-year journey from start to finish. But the cool thing is he's now going to do it potentially for more deals, as well as roll it out to all of his partners and clients. Because what happened was what was potential, what was too good to be true is now real for him. And so I'm going to pause there and see if Jake has any thoughts on that particular deal story, any nuggets to pull out.
I think sometimes taking a few steps back, essentially the client had a tax problem. And it wasn't an easy thing to do, but you were able to help them get a solution. And the solution incorporated more than just one strategy. We had to combine two. But at the end of the day, and of course, along the way, had to educate all the other professionals involved. So many different things that we can pull out of this story, Brett. One, we work really well with other professionals, not a competitive or a scarcity mindset at all, an abundance mindset. There's work for everybody. And in fact, these larger deals, you should expect a team approach. And coming in with IRS code, coming in with an explanation and education, not just for the client, but for the other professionals, so that everyone that has a voice to be heard at the table for the client can speak their piece, and we can all get on the same page. I think that's critical and very important for clients to know. We're here to help them and their advisors so that their financial future looks better.
Perfect. Very well said. Thank you, Jake. Doug, any questions on that particular deal? Anything that didn't quite make sense? Because I know you're learning about this for the first time, although you're a seasoned real estate professional and cryptocurrency investor as well. So anything that I said that was like, because sometimes I move fast, right? And I'm so close to it, but anything that you want me to kind of tease out or pull out more?
Well, thankfully, I spend a lot of time learning about real estate and tax strategies. What I loved about the story was that your client, although fearful, did have an open mind. Although, it did take him a little bit of time before he would, as you said, dip his toe in the water. And as well as his trusted professionals, the intermediary that he was using. And I just found it interesting that you were providing education to these other professionals, which is something that I've had to do along the way with certain CPAs that I've had, and ultimately it left me searching for better and better and smarter people, because that makes a difference, having the right team in place to help defer taxes or lower your overall tax liability. I think it's really critical, and I love how you guys have the approach of not only working with the adding team members, but educating along the way so that they're getting better at what it is that they're doing, and helping the people that are open-minded learn about these strategies.
Absolutely. Thanks so much for sharing that, Doug. I attended a global leadership conference here. I do it every year. It's an online event. It's one of the biggest ones in the world. And one of their key core values is humility. And what they say is, hey, when we come with a humble mindset and a humble spirit, we can all learn from one another, right? And like Jake said, and like you said, Doug, like we're here to try to be as humble as we can and be open to ideas and open to strategies and open to feedback and pushback, and that helps us to get better on our thinking. And in fact, with the IRS audits that the DSTS face, is exactly the approach that which I really appreciate about the founder who created this, Todd. He goes, hey, IRS, here's what it is, and they give him feedback on it. And all these audits were no change audits, but guess what? He adjusted the way in which he did these things, and the approach and the execution and the documentation, and it's refined this process, and he streamlined it, and he was humble enough not to push back. And one of the scenarios was a promissory note that was set for about 15 or 20 years, and then the client hadn't taken payment for 10 years. And I love when he tells this story, because the IRS audit is looking at it, he's going, so he hasn't taken payment in 10 years. He's like, no. And he's like, so is he ever going to pay the tax? And he's like, well, yeah. Well, right now it shows him like, how are you going to do this? He's like, this is a 20-year note. He hasn't taken in 10 years. He's not paying any income tax. And he goes, no problem. We'll change that now. And so now we set it up where we take payments sometime in the first couple of years, right? We get that going to show that. And that was a slight adjustment, but it takes that spirit of humility. Instead of like pushing back and saying, oh, it must be this, he said, no, let's adjust it, and let's make sure that it's a win-win for everybody, especially the IRS. We want to make sure that everything's above board, and it's not tax avoidance, it's tax deferral, just like an IRA or a 401k, kind of like those things, right? But it's specialized, and it works for, which leads into the third thing, cryptocurrency, okay? So if you're hearing about this for the first time, as of a couple weeks ago, we're excited to announce that the first Deferred Sales Trust cryptocurrency deal has closed. And you can go back and look at the full story. But as a quick recap, this particular client bought Ethereum for about $100,000 in the tech industry, had been in the tech industry for 20 years, saw the value of Ethereum and Bitcoin as the business use, had conviction on his investment in the future of Ethereum, and rode this tidal wave of just growth. And he saw growth to about 2016, 17. He saw it grow to about $6 million from about 100,000. And then he saw it in early 2018 crash, right? And he was hoping to sell, but he didn't want to sell until he had a clear deferred capital gains tax deferral strategy. And so he didn't know about us, and he didn't find one, but he held on. He had the titanium spine to hold on, and he saw it rise all the way up to, in 2021, to as high as $13 million. And so I sat down with him in the Bay Area, and I said, why do you want to sell this? Like, what do you want to do? What's it going to do for you and your family? He's like, well, we work 60, 70-hour weeks right now, my wife and I. This means I could not ever have to work for the corporate world ever again. I love what I do, but also I don't necessarily. I kind of want to start a new entrepreneurial journey in the crypto world space, and I'd like to be able to do something my own. And we have 2 kids. We want to travel more. We want to go overseas. We want to do a couple different things. And so that was the vision for the plan with the money. Now, here's the crazy thing. Within 2 weeks from us meeting, we had to set everything up. That 13 dropped back down to about 6 or 7. And it was like really painful. And then it shot back up some, and now it's on its way to 4,000, which is kind of crazy to think about right now. Doug, have you seen the prices this morning? Where are we at here with the
I just checked. It's 39.77 right now. So we, within maybe through the weekend or whatnot, if it continues going up, it's up 5% in the last 24 hours. So it's looking good.
It's looking good, right? So his target price was 3,000. So we set a goal. We said, okay, what is your target exit price and what amount? Okay, and that's when he set it at the 3,000 mark, and then he took a big chunk of that amount out, and that was, again, you can hear the full story. It's really exciting, but leads into this next one that we're talking about. We're working through right now. Jake, do you want to touch on our process and our journey with a co-client that we're working with for his case?
Absolutely. So interesting enough, again, going back to the very basics of the conversation with the client, there's a problem. All right. So this individual did phenomenally well with crypto. Very humble individual, very non-assuming person, hardworking blue collar person that on the side happened to spend his nights researching and investing in crypto with his life savings. Right. So his life savings were, when we're in the space of the clients that we deal with, wasn't a ton. Fortunately, he ends up with about 10 million in crypto. All right, so 10 million in crypto, and he's just expecting to give half of it away to taxes. All right, so that's the problem, and in his mind, he didn't really even understand that it was a problem. It was an expectation. And after having a conversation with him, an educational conversation that maybe perhaps he doesn't have to this moment pay all of that in taxes, that perhaps he could deploy the $10 million, all 10, not just half, into other investments. And he could continue to reinvest in other forms of crypto as he wishes. His eyes just lit up. He says, first and foremost, Jake, sounds too good to be true, right? So educational process continues. Take him down the road, help him understand, help him see other people who've done it, help him hear the stories, help him investigate the law firm that's been doing this for 25 years. Help him ask all the right questions. Ask the questions that he should ask that he doesn't know to ask. And then hold his hand. Right now, there's a number of different digital wallets out there, Doug, as you're very well aware, and some of them aren't as responsive as others. Some of them, to open an account, maybe in 2 weeks, maybe in 4 weeks, maybe in 2 months, maybe in 3 months, they'll open up a corporate account or a trust account, something fancier than with my social security number, right? Got those stories. Right. So Brett and some others have done a thorough analysis on, with some of these players, and we've actually been utilizing Kraken. Kraken is just a platform out there. They have several different names. They can be a custodian. They can be all these different things, right? Essentially, they will help you open a digital wallet. They are familiar with the Deferred Sales Trust. Brett, the first go around, it was probably 70 emails and so many days later, and it opened. For this particular client, how long did it take? Has it been 2
Yeah,
weeks?
so that's a great point. Yeah, so the first one took about 90 emails, and it took about 90 days from start to finish. Like it was, and I actually really appreciated it because, banks don't do this level of intensity with pictures of myself, pictures of my wife, capital gains tax news, LLC documents. Literally, we had to give them our copy of our living trust to track the capital gains tax solutions. And then also the client as well, they're doing the KYCs with them to track it to the one single investment DST account because they want to make sure that, hey, we're not doing anything that's illegal and we're not doing something that's going to be, terrorist activities or moving funds that we shouldn't be moving. So I actually really appreciated it, and they had never seen it before. So they really asked great questions, and honestly, I applaud them for doing that. Now, the painful part was that first deal, by the time he was ready to go, and by the time that we were ready, the account was ready, that's where it dropped from 13 million to about 6 or 7, right? And it was like, his heart was like ripping out because he's like, we were so close, right? But then again, it's come back, and now we're feeling a lot better. But now, this new one, 2 weeks, right? So from the time that we actually had the EIN and put it to them, and on top of that, maybe 2.5 weeks, we've also now been able to show them consistency in what we're going to be doing. And basically I told them, like, my vision is somewhere between 100 and 200 million in the next year with cryptocurrency alone. I said, would you please consider giving me a dedicated specialist who understands this, so I don't have to start from A to Z every time with a brand new customer support representative, right? And what do you know it? They actually set a meeting on my calendar, and all of a sudden I showed up on a Zoom, and there was another person. Now he was blacked out, right? But he was from Kraken. His name was, I won't even give his name, but he said, yes, I will be your dedicated person. And that email got them moving, and he's going to set up a dedicated email address now moving forward. And there's certain documents that we're going to be able to have on file that are always the same for every single trust. And then there's going to be the new trust documents and the client. And so now we should, honestly, my goal would be to cut that in half every time. So if we went from 90 days to about 2.5 weeks. My goal would be to get it to, let's say 7 days, and just give them everything they need. And then ideally we give them everything they need all in one swoop, and they open it up in 24 hours. That would be the ultimate goal. So any thoughts on that, Jake, or feedback?
No, that's a phenomenal thing. Essentially, we're helping a lot of people in the future of crypto that want to be able to facilitate this process. They're accustomed to things taking a long time, but because of the work that we've been doing, it will enable them to quickly make a decision like this, and unlike the first individual, be able to take advantage of when the dollars are high and sell out in the name of the trust, so that it's collected, it's all rolled into the shell of the trust, so to speak, and they don't incur personally any constructive receipt of the sale of that transaction, meaning they don't have to pay taxes because of that one transaction.
The taxes. Yeah. And Jake, is there any cost to do all this? Like, is your client, our co-client, is he having to pay anything yet? Has he paid a dime on anything to us or me or you or the law firm, or setting up the trust and going through all this? Any cost, Jake?
So Brett and I, we're performance-based. We don't get paid unless there's performance. The law firm is conditional in their billing, meaning they don't bill for all of this work, all of those 90 emails in 90 days and everything else that they helped you with, Brett. They don't bill for anything unless the account funds. Once the account funds, they take out their one-time fee. Brett and I, we charge an ongoing fee based on the assets that we're assisting the individual with. And that's how we become your executive team moving forward, so to speak, in regards to the assets inside the trust. And when I say assets, again, we can be reinvesting in crypto. We can obviously invest in the stock market. And of course, moving forward, Doug, as you're very aware, we can reinvest in other real estate.
Right. So the key here is there any upfront cost for the deferred sales trust? The answer is no. You pay once the deal actually closes. The trust pays out of its proceeds. And so that's the beauty of the way we work. Hopefully that takes the pressure off of you to do your due diligence, to learn, to not to feel like you're pressured. And for some reason, your crypto drops in half, or you decide not to sell, or whatever, right? Like, no problem. There's no hard feelings. We'll hopefully help you on the next one. By the way, I also mentioned too, he didn't do all the millions at first. We did small little chunks. We started with like 25 cents. In fact, he did 5 cents, and Kraken didn't recognize it, so they don't know it's too small. So he's like, "Oh, it didn't move. That's weird." And then we did 25 cents worth of Ethereum, and it went through. So we always like to get the pipes going and running and just smooth. And anyway, so that is that. Doug, any thoughts or feedback on any of that, or questions that you might have?
Well, I love that you spent time smoothing out that road. My experience in setting up my own corporate accounts with these crypto trading platforms, it was a little rough. I started with attempting to open up a Gemini account, and for me, it was I had a Roth IRA that I was using, and then also I had my corporation's 401k account, and so I had cash sitting in there from sales that I did from real estate, and it's just sort of my small corporate treasury. And it was difficult. The KYC procedures were very brutal. I ended up getting frustrated. And so then I attempted to open a BlockFi account, and then also a Celsius account. And then funny enough, it took like 4 or 5 months for me to get the account open. And then they all opened at once. I'm like, okay, now which platform do I have? But the process was difficult. It was, and I think one of the things that started happening is, in 2020 and into 2021, as crypto started, really the prices started going up again, there was a lot more interest. And you see guys, who are huge advocates of Bitcoin, Ethereum, and these other cryptocurrencies. It really is growing up. The adoption rate is growing really fast. And so these companies who were staffed for, doing processing X amount of applications, now all of a sudden they're being overwhelmed. And then with the great resignation that's going on around the country, staffing issues and being able to just process things quickly became difficult. So it did take me quite some time, and it's very impressive. Now you've got your dedicated person who knows how to fast track this unique way of getting your accounts open. And so there's a ton of value in that. And I hope people recognize that, especially other people that have corporations or corporate treasuries that they want to use and invest in these alternative, maybe they're alternative now, but eventually be mainstream. People are going to have crypto, as part of their asset base.
Mm-hmm. Beautiful. Thanks, Doug, for sharing. Yeah. Thank you so much on that. Jake, any last thoughts on that? And otherwise we're at the 30-minute mark. I think we covered a lot today.
Yeah, I think I'd just reiterate that everybody's situation is different. If this were easy, any normal professional would be able to help you out. We're here to help your professionals and you have a successful experience. And again, that comes with a degree of customization. That comes with a degree of work. Sometimes we put a lot of work in before we ever get paid, and we may not get paid, but we do it because it's going to help the next client. And again, when the client has a problem, and that might be, hey, it's a tax thing, or it might be, hey, I understand the whole DST and all that, but how do I get the doggone digital wallet to get up and going in the name of the trust so that I can move things over? Or it might be something completely different that we haven't talked about on today's show. Every week, we're going to go over some of these issues that we've helped provide solutions for. And so I would encourage that, if you've heard it before or whatever, come on again, because every week we talk about a different client story, a different success story, and we're here to answer questions. And so if you got a question, or even if you don't, come online and you'll learn something new.
Excellent. And by the way, I want to encourage everyone to go to the YouTube channel and check us out and subscribe. I just released the full video on that Ethereum case in the blog post. You can go to capitalgainstaxsolutions.com, search on blogs. It's on the top blog post on that exact deal and kind of the breakdown and kind of the cool things. I actually give prices on the timing of when things were high and then when they dropped. And so I kind of walk you through the whole play-by-play, which is kind of cool. So again, you can go to capitalgainstaxsolutions.com. You can also go to that Capital Gains Tax Solutions on our YouTube channel, iTunes, and then hear that show. Jake, for those though who are listening and want to get in touch with you or I, but start with you, where is the best place for them to find you?
Yeah, 1-800-773-1848. Again, 1-800-773-1848, or you shoot me a direct email, Jake, J-A-K-E-M, and for my last name, at alphamark.com.
Beautiful. Doug Grace, you're also welcome to plug as well. Give our listeners a little bit about maybe your background and also where they can find you as well.
Yeah, I'm a real estate professional in the greater Sacramento area of California, a broker, entrepreneur, spent most of my career with primarily single-family investments and small multifamily properties. So anyone that's interested in that space, as well as helping primarily these days, I'm helping agents learn about how to be more productive as a realtor, as well as how to take advantage of certain tax structures and how to minimize the tax liability that they have so that they can keep more of the money that they're earning. My email is douggrace@gmail. So super simple, douggrace@gmail.
Beautiful. Thanks, Doug Grace. Thanks, Jake Miller. And I want to thank our listeners and everyone else out there. You might be also hearing this on a podcast on iTunes, right? I want to thank you for listening to another episode of the Cryptocurrency Deferred Sales Trust Mastermind and or the Capital Gains Tax Solutions podcast. You can also might be hearing this on Expert CRE Secrets, which we're talking about all things brokerage, all things doing more deals and helping to add value to your clients using the Deferred Sales Trust and other strategies. As always, we believe most high net net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is the best way for you to defer capital gains tax on cryptocurrency, business, real estate. Please reach out to us. Please attend next week. Please rate, review, subscribe. Please share this with somebody who has a huge appreciation in something so that they aren't having any regrets when they sell. And we look forward to talking to you.